BlackRock is one of the world's largest and most influential and global leader in asset management, offering a wide range of investment products and services. Founded in 1988 by Lawrence D. Fink and a group of partners. Key aspects of BlackRock. 1. Asset management. BlackRock manages a broad array of assets for clients, including equities, fixed income, alternative investments, like real estate and private equity, and multi-asset portfolios. The firm provides investment solutions to various clients, including governments, corporations, pension funds, endowments, foundations, and individual investors. 2. Size and reach. As of 2025, BlackRock manages over $9 trillion in assets across various investment categories. It has a significant global presence with offices in over 30 countries. This large scale makes BlackRock a major force in global financial markets, with influence over a wide array of investment sectors. 3. iShares and ETFs. One of the most notable contributions of BlackRock is the development of iShares, its exchange-traded fund, ETF, platform. iShares has become one of the largest providers of ETFs, giving investors low-cost and efficient access to various asset classes, regions, and sectors. 4. Technological innovation. BlackRock is heavily invested in technology to improve its services, particularly through the Aladdin platform. The platform is used by both BlackRock and other institutional investors to manage risk and optimize portfolio strategies. 5. Commitment to sustainability and ESG. In recent years, BlackRock has taken a strong stance on environmental, social, and governance (ESG) investing. It encourages companies to focus on long-term sustainability, environmental responsibility, and strong governance practices. It has set specific goals to achieve a net-zero carbon future for its investments by 2050. BlackRock is a financial giant with deep influence over global capital markets. BlackRock operates in over 100 countries globally. As of 2024, BlackRock manages over $9 trillion in assets, making it the largest asset manager in the world. The nominal global GDP for 2024 is estimated to be around $104 trillion, based on IMF estimates. 1. BlackRock's $9 trillion assets represents about 8.7% of global GDP. So, BlackRock's assets are nearly one-tenth of the entire world's economic output each year, which gives the company a significant influence on global economic activity. BlackRock versus country GDPs. 3. In comparison to individual countries' GDPs, BlackRock's $9 trillion is larger than the GDP of many of the world's largest economies. 3. For example, BlackRock's power in comparison to countries' GDPs, 2024 estimate. United States GDP, $26.7 trillion. BlackRock's represents about 33.7% of the US GDP. China GDP, $19.4 trillion. BlackRock's would make up about 50% of China's GDP, Japan GDP, $4.4 trillion. BlackRock's assets are around 184% of Japan's GDP. European Union GDP, $17 trillion. BlackRock's assets represent about 52% of the EU's GDP, Germany's GDP, $5.2 trillion. BlackRock's assets are roughly 173% of Germany's GDP, India, GDP, $3.7 trillion. BlackRock's assets are 243% of India's GDP, United Kingdom, GDP, $3.1 trillion. BlackRock's assets is about 290% of the UK's GDP. 4. This means that BlackRock's assets are comparable to the size of the GDP of the United States, and larger than that of China or Japan. 4. BlackRock's assets exceeds the GDP of entire regions, such as the European Union and China. 5. In comparison to individual countries, BlackRock's assets are often multiple times the size of the GDP of nations like India, Brazil, and the United Kingdom. 6. BlackRock is an incredibly influential player in global financial markets. 6. It holds significant stakes in some of the largest companies in the world, including major firms in technology, finance, healthcare, and energy. Due to the size of its assets, BlackRock has the ability to move markets. 6. A large decision or investment shift from BlackRock can impact entire sectors or even entire countries' economies. Deciding whether it's profitable to buy BlackRock shares depends on several factors, including the company's financial performance, growth prospects, and market conditions. BlackRock's financial performance. 1. Strong revenue and profit growth. BlackRock has consistently shown solid financial results, driven by its diversified portfolio of assets under management, AUM, which exceeds $9 trillion. 1. The firm generates revenue from various sources, including management fees, performance fees, and technology services, via its Aladdin platform. 2. Earnings reports. BlackRock has regularly posted strong earnings, with growth in both revenue and net income. 2. The firm's profitability is typically stable due to its position as the world's largest asset manager and its broad range of products and services. Is it profitable to buy BlackRock shares? 1. Positive factors are that BlackRock is a profitable and well-established company with a long track record of growth, stable dividends, and market leadership. 1. Its large AUM, diversified revenue streams, and leadership in ESG investing make it an attractive investment for many investors, particularly those seeking exposure to the financial and asset management sector. 2. Some considerations are that investors should also be mindful of market conditions, interest rates, and the stock's valuation. 2. While BlackRock has generally performed well, any investment in its shares should be based on careful analysis of market conditions and personal financial goals. If you are looking for a stable, long-term investment with exposure to global financial markets, BlackRock shares could be a good option, especially if you are interested in a combination of growth and income, via dividends. However, like any investment, it comes with risks, and it's important to evaluate your personal financial situation, goals, and risk tolerance before making a decision.